All right, so let me say hello to everyone. Doug here with the LincolnList.com. Yet again, another episode of Stock Market Mutterings. This will be for the 6th of April. Hope you guys are doing good. Real quick shout out, if you need help with your trading, you're struggling with the volatility, you're trying to take your game to the next level, visit the link right there on the screen. Start trading with us live. I got a couple announcements I just want to make. Not a couple, just one announcement I'm going to make. I'm going to start doing these things live starting tomorrow. I'm going to start posting these live as sort of a off-the-cuff, live trading, live watch list sort of thing. Now, I did this a couple of months ago, maybe probably longer than that, but it was recorded after the market. I think for right now, which could change, I was debating whether to go pre-market or post-market. I'm going to go a little towards the end of each day, talk about the day that I had, and talk about some of the stocks that we had and what I expect from the market. And I'm going to do this like in a live environment here from the new studio that I just started. So make sure you check out the YouTube video if you want to see what I'm talking about. So we'll give that a go, see how it works. We appreciate any sort of feedback, comments that you guys have. Just let me know. So let's talk about some stocks right now. We're still in this. If you remember the one I did last week, it was like, is it a bear market or a bull market? Have we found a bottom? And the answer is no, we have not. It's too volatile right now to say this is the bottom. Now, if you're a long-term investor, you're doing something like that, then fine. But if you're day trading, it's really been more than ever. It's the day. Some days we've seen have been ultra bullish. Other days we have seen have been ultra bearish. And it's just been that way. And the thing is, sometimes when you start getting a couple of bullish days in a row, people start getting hopeful again. They start buying, they start chasing, and then you see what happens on Thursday and Friday. Well, later in the week, you start getting sold off. So I give you this from a technical perspective. It's just me. I'm just day trading. And there's nothing I can do about the market. I just kind of have to live with what's in front of me and then move forward from there. So going forward, we'll just take a look at the SPY. It's a pretty simple read from this point. You've got a nice run here that come off the lows, which was 219-ish. Comes up here slightly above the 20 moving average towards 262s. I mean, these ranges are sickening, aren't they? They're just mad. And then you pull back in here. In the last couple of days, you've been able to hold 243, maybe just a little bit higher than 243. So you got Wednesday, Thursday right there. And then you got their low on Friday, was able to bounce off of that just prior. So going forward, just make it simple on yourself right here. Let me give you a little line. This is the line in the sand for right now. If the market is able to fight off this 243 area, it's able to fight off this spot, we should see a run that comes back up to the highs. Okay, this is now your range working throughout the week, And if you're just day trading, it's like the closer you get to this level, you probably should be buying. The closer to this level, you should probably be selling unless you get different data. That's just how I've always done it. Now, if you get down there and you fight it off a few times and you ultimately lose that, that's a completely different story. I would doubt it would just run right through it the very first time, but you never know. If that happens, you don't have any support really in this daily until you're getting down about 234. So I would expect somewhere down here, that would be the next test. Maybe you get a little bit of help at 239, which was the base from here. Otherwise, you might test the lows. Now, I know some people are talking about we have to test the lows. I don't necessarily think we have to test the lows. We might, but we don't have to, because this is just a simple back test right now. Simple back test with consolidation. Although it's wide range, that's all you see right here. It's a small back test of the recent rally. And the longer the market can sustain this area, the more likely you're going to get a move upward. If it struggles in this spot and it can't get traction above the 250s, 255s, somewhere up there, then you're going to have a hard time making a move up here. You're probably going to end up coming backwards. So kind of look at that forward. Be careful if you're getting up here with your longs. Be cautious down here as well. Don't chase shorts either. But pay attention to these two levels. At some point, I expect them to get tested out this week. If this one goes, then start looking down here in these spots for possibly some sideways action. Now, what I'm going to do is give you a couple of bullish stocks. Yes, there are a couple, and a few bearish stocks. Let's go with those. I'm going to start with Peloton. I've been talking about this one here for, quite some time. What a performer in this market. You're sitting right here at a pretty vital spot. stretch this out just right here. This 29.30 right here is pretty valuable to this stock. I mean, it's bouncing up here, it's tapping on it, and you're going all the way back here to later February. And if you can get through this, there's some space up here. You're probably going to trade right on up to this. Now, this can be looked at, I think the consensus here is looked at as a quarantine play, that everybody's going to get fat and sloppy at home because everybody's staying home, and they're going to buy exercise equipment. Now, that makes sense. Are they going to buy $10,000? So do yourself a favor. Keep Peloton up here on your list. It's got some potential, and it looks like right now, at least, it's a quarantine play. We'll see. Could be good for cash. Real good performer. On the other side, maybe, it is hard to find some good longs, but I tell you, maybe BABA. And I would say only as a cash flow long. I'm not sure that we're completely done, but you do have some levels to work with, which is important. And in fact, let me take BABA back for a long and just say long or short. You've got a couple of different options that you can do with something like this. The range is a little tighter, at least a shorter term range. You've got this 185.30s right here that you can work with. In the last couple of days, you've had some resistance at these 191s. So it's a pretty straightforward read, just like the SPY, except for the range is a little bit tighter. If you get another tap on this and you lose this base of 184.43, I would lean to the short side on that. There's a little bit of room down into the 180s, maybe even into the gap. And if things really get ugly, maybe down into the 178s. But the thing with this one is it's holding up pretty well, considering what else we're looking out there. It's not the best chart you've ever seen, but you do have a good base to work from. And I do believe that if it trades above this 191, that you're at least, bare minimum, going to trade back up to the 196s of resistance. Now, depending on what kind of trader you are, if you're day trading, that could just be in one day. We have no idea. I mean, we could wake up and you can get limit up, limit down. You don't know. So, again, if you, going forward, the way I like to do this is when you get down into the supports, take a look at the top. Here's the last couple of days. You get down into the supports, you're better off buying, because at this point you're chasing the short. And shorts chase too, and they get murdered. That's what causes these things to turn around and rip so much. So you got a good base here, and you got a good base right here. So each time you get down here, look forward to that. You start out tomorrow and you're trading around here the first couple of minutes and it's unable to get through, you're probably going to bounce. I'd say you're going to get a bounce. Again, on the other side, you can see clearly the resistance up here. So every time you're getting up here right now, it's more of a short. So if you gap up and you run into that number, you got to be thinking more short than long. Now, that could always change. You know, the market's the variable. Maybe we're up 1,400 points and there's a cure for coronavirus. That's a different story. But not a bad chart. Not a bad chart right there whatsoever. So let's move on to Netflix. I know I talk about the same stocks a lot, but I trade the same stocks, and I suggest you guys do the same. It's an easier way to do it. You learn these stocks. You learn their behaviors. I've done webinars about this. I'm telling you, it's a good way to do things, Netflix. Again, Netflix could be considered a quarantine play. More people are going to be home, bored, watching Netflix. Makes sense. And it's held up really well. And that's what you're looking for. If you're looking for longs, you're going to be looking for stocks that are holding as well as they can. They're all going to be off of their highs, most likely. But you're looking for stocks that have relative strength against the market. And this is another one. Now, the thing I like about this stock, I'll give this one a little bit different view than I did BABA. And that is, Netflix is very trendy, and lately it's been moving in a certain direction. So if it starts out strong, it usually finishes strong. Now, it's not 100%. We're talking about stock market trading. I'm just giving you the overview, but most of the times, it starts out strong, stays strong. When it starts out weak, stays weak. So right now, you got to take advantage of that because there's a really good chance that it continues to move that way. And if you have these strong days, you could get up here to 382, possibly back up to these recent highs of 392. So I kind of like this one here. Now let's take a look at some possible ones that are just, to me, are shorts right now. These low, I'm going to call them thin betas. I'm going to start with W Day, Payc, Payc here. Who else would be in this one? COUP, C-O-U-P, COUP. These softwares, these thin betas, I'll tell you what, man, they are getting busted up, especially these PAYCs. And here's the thing about it. When they're selling off, they're putting in easy double digits. I mean, they're almost dropping 20 bucks. The reversals that they're making intraday are insane. I mean, you're looking at PAYC here trading at 185 on Thursday morning and finishing at 165 on Friday. COUP was another one which I was bullish on last week because this was a beautiful breakout here on the daily. Look at this nice setup here on the daily. And this is stock market trading, guys. Beautiful on the daily. And look at this 50 moving average rejection. Wow, look at that. And it just washes out. I mean, it just gets murdered. And overnight almost. I mean, these things just have maddening range. Now, at some point they'll bounce, but I would be looking at shorting any bounce on any of these until further notice. And I guess you could put the Roku in here, which is the standard of shorts in my opinion right now. I mean, this is slow. It's constantly downtrending. And when I say shorting, I'm just talking about cash value, right? I'm not talking about long-term investing and what all that kind of stuff is about. But you got really good rejection, got solid pullbacks off of this. Every single time it spikes, it sells. I mean, it's a spike and sell. So until that stops working, you use that. And at some point, it will find a bottom and that will change. But I do kind of like the way Roku looks. So in a recap, right now, I'm pretty much solely trading futures and the market itself. And the reason I do that in these high volatile situations more than any is because almost every stock, not every stock, but a good portion of them in this kind of case is going to follow what the market does. So rather than trying to just nitpick one stock here, one stock there, scanning for news or trying to get this and that out of one stock, you could just look at one thing all day long and get a better understanding. So whenever the market rips, these things are going to, Apple's going to go, Facebook's going to go. You can get whatever you need right now out of the market. Now, that might not be a taste for everybody, but this is where I pay attention to more often. Once this volatility stops, when we enter a different kind of market where we're seeing more sector rotation, then we'll change our minds. But for now, that's not the case. So going forward, or whatever, really, it doesn't matter what stock you're going to trade in most cases. Watch these levels up here. You start getting up here, be careful with your longs at first. But if there is a move above this that can stick, then there's some big space up here to fill. That could be a monster rally, like one you've never seen before. That's on the table. But on the other side, if you can't move off of that and you start losing these 244s, we're going to have issues here. We're going to end up back down at the lows. And that's okay. Whichever way it wants to make, just follow those paths. That's what's going to lead you there. Anyway, guys, thanks for watching the video. Don't forget, Market Mutterings, we're going to try this every day again. We're going to chit chat, send me your thoughts, feelings, your stocks, whatever you got, and we'll go from there. Until next time, guys, take care. Trade well.